VIX has a funky little structure here, just kind of for giggles, left shoulder, head, right shoulder, means nothing unless it can actually trigger and keep going. It would basically be a gap fill. In other words, if this triggers, it's going to stay right where it is, and it's going to come right up here and gap fill, which would bring us back to the Wednesday before the big market move. So keep that in mind. And VIX, by the way, is green. I just pay attention to the VIX if you are pressing long stuff, right? So we could go into next week after this expiration. See where we had this weekly trend line, it went below, back, and then bullish harami, and then it gapped up. And that's when we had a kind of a pullback from that August 16th all the way into end of September. And then we had, obviously, mid-October to right now, mid-November, right before the next options expiration on Friday, we're having an inside week. So just kind of keep that in mind. We stay one more day, 2 more days here. We could easily go to 25.20, but I think we're going to fill this gap at 26. The question is when. Yeah, we still would have to get above that. So basically 24 would be the trigger. Might be until next week for VIX, just like it did back here in August. Very similar. VIX looks absolutely like it wants to move higher. The measured move is basically back up here to 26. So careful pressing long here. I mean, obviously, so much of this is happening in futures. So much is happening on economic data, intonating a, inflation expectations weakening, like last week's CPI or this week's PPI. But mostly it's triggered by the yen and the dollar and yields, especially as it relates to this gamma option flow. And a lot of positive gamma is helping the sentiment stay and the market stay bid right into options expiration and potential year-end rally. Lots of talk about the Fed balance sheet runoff, but in fact, they've done the exact opposite. They've supported the market. So TGA and repo and all of that is just totally been supportive of risk on. So you've had liquidity come in versus out. You've had VIX stay suppressed, oil stays suppressed, yields and dollar fall for this sharp risk on rally. Period. That's it. That's the reason for the season. So now we got to wait for it to reverse. Side of your vision here is VIX. Something interesting on VIX though, calls have gotten a lot cheaper. So basically the implied volatility is very low, very low. We haven't seen the weaponization of this VIX structure yet, but relatively speaking, they could absolutely come in and start piling on VIX to create some risk in equities. This would be the time. It's definitely getting to a point where it still makes sense to have some VIX. I like March timeframe personally for any kind of what's the word? Crash puts, crash VIX. But just keep eyes on this little puppy. VIX looks a little perky here. If not this week, then I would say next week. And yes, nat gas is definitely, as Anne has said repeatedly, a weather bet. Yeah, and she also says sad how we're all FX traders and rates traders instead of actually buying businesses. All right, yesterday was a distribution day. Today was a gap up day on 13Fs, mostly semiconductor and weak PPI. Still think this leg up can see 41.30, maybe by the end of the week. It's really tough on the timing. I mean, this is getting a little bit interesting, but it doesn't really matter. As long as this is trying, they're trying, and they're making it happen little by little. But VIX is not dropping much, so it's definitely something to keep in mind. August rally stalled out on VIX expiry. That's a very good point, which is tomorrow. May rally stalled out on VIX expiry. Ooh, that would be right on cue, wouldn't it? We don't have any strong reversal intraday. The fact that this is green is the only indicator of risk right now. Keep in mind, some of this rally is based on hope that there's some kind of promotion of peace between Ukraine and Russia. China's to play a role, apparently, in meeting with Russian foreign minister. Oh, Harker came in very bearish, dovish. Harker repeats, that's a Fed head, sees rate hike pace slowing in coming months, sees Fed going on hold at some point next year. VIX pushing through right now. Measured move again is 26, which is basically this entire gap fill from Wednesday. We still have upward pressure on TGA, et cetera, et cetera. They're not really doing QE. They're really playing with us. They're still adding liquidity, not taking it away. The very first bump would be right here, basically 24 and change. Second bump would be 25, and the third bump would be this 26 area gap fill. I'm going to get rid of that actually. Bump meaning price target. So if we get follow through, those are the levels you want to stay above. First level, you want this to stay above, right? This is kind of left shoulder, head, right shoulder. You want it to stay above. First price target would be like this 24. Second would be 25, 24, 25. And then the third would be that all the way the gap fill. So could get eventful. VIX pushing through right now. Maybe by the end of the week. It's really tough on the timing. I mean, this is getting a little bit interesting, but it doesn't really matter as long as this is